Morning, everyone. It's Monday morning, the 15th of March. We're Signal Centre Talking Ball. I'm Joe Neighbour and I'm joined by Steve O'Hare. Morning, Steve.
Morning, mate. All right?
Yeah, not bad. Thanks, you.
Yes, not too bad.
Good, good. See the mighty Arsenal yesterday?
I did actually, yeah. What a
Did all
great
right.
goal! I must admit, it was overshadowed by the Spurs goal, but
Yeah,
it didn't really matter in the end. Yeah, wow.
yeah. Decent North London ding dong, that one, wasn't it?
Yeah, that's what it's all about, isn't it? Getting the passion back into it, even if the
Absolutely.
fans aren't there.
Yeah.
Sending off as well. He got sent off, didn't he, Lamella?
Yeah, Lamella did. Yeah, very eventful game. He came on as sub, didn't he, when Son got injured and then scored a
Scored a
worldie and then got
blinder.
sent off.
Yeah,
Never
yeah.
mind.
Shame. I was just
Could have
shame
happened to a
for.
nicer club.
Yeah, exactly. I felt I felt for Marino, obviously. Not.
Really. Okay, right. What's going on with the world of finance today? So, over to COVID vaccines to begin with. We've got German Chancellor Angela Merkel facing a bit of discontent over Germany's slow vaccine rollouts and also a face mask scandal. She suffered her worst election results ever in the two regional elections. So, obviously, a bit of a link there to vaccines. But over to Astrazeneca, which was fairly big news over the weekend, facing some further pressure in Ireland on Sunday, with them joining a series of countries moving to suspend the shot over concerns about the possible side effects. There's been links to blood clots apparently, but the company have gone on record and continue to say there is no evidence of increased blood clot risk. Looking at the share price today, not really a lot going on with that, to be honest. So,
Yeah,
not doesn't seem too much to worry about. Certainly from a corporate side of things from AstraZeneca. It is also worth noting, though, that it's a non-for-profit vaccine that they've created, so they're not actually making any money out of it, which, thinking about this yesterday, it's probably quite a good move from the company. If they because obviously they've been under some significant pressure to roll something out very quickly. If there were to be any impacts or side effects down the line, then it wouldn't necessarily impact the business other than maybe just a bit of reputational damage.
yeah,
But certainly not going to impact in terms of bottom line. And at the same time, they're trying to help everybody out. So, a bit of a weird one, I guess.
yeah. It is. Don't really know what to say about it. You sort of it'd be good to understand the sort of like the numbers of people who've been affected by it.
Yeah,
I'm sure that they're working hard to find all this, and the problem is nowadays with media, it's just you get the this horror story, if it is true, out there.
yeah, it
But
really is.
but it's sort of like, again, you can have sort of like anomalies within sort of vaccine rollouts as well. So um, if the numbers are high, then there is a bit of an issue there for everyone. So
Mm.
that's why I don't mind being further down the line. Let's use everyone else as a guinea pig first, eh?
Okay, so elsewhere, we've got a 3-day rush of central bank decisions from the US to Japan. Policymakers confront the enthusiasm of investors betting on inflation returning. In the US, also, we've got the stimulus checks went out this weekend, which potentially could set the stage for a new retail trading frenzy. So, worthwhile keeping an eye on that. We saw Bitcoin top 60,000 over the weekend. I don't know if the two are linked, but clearly a bit of renewed speculative fever there. And I imagine the Reddit forums will be lighting up this week with people on the hunt for new ideas potentially if they're all armed with $1,400 each.
Yeah, it is. It's a bit of a concern, isn't it, when a lot of people just sort of like diving in sort of blindly almost.
Yeah, I mean,
We've
what do you
talked about
do
it
though? Do you just
before.
sort of ride the wave short term? But you've got to think that there will be, um, you know, maybe stoke a new bubble potentially, and
Yeah,
things, as we know, when bubbles pop, they don't end well. And thinking about
it's
this, if you've
usually
got all these new money coming into the market of inexperienced traders trying to make a few quid, effectively you're just doing, transferring the wealth of all these people into, the guys that don't need it, who are the smart money, who will be fading it the other direction.
yeah, absolutely. It is a massive concern, and it tends to be like this at the end of bubbles, where money sort of ends up in the hands of the retail punters, and they sort of like they get in at the top of the market.
Well, we've already got massive issues with polarizations between the wealthy and the poor, and this may be exacerbating that even further, which is scary, really.
Yeah, I love the word big long word you're coming out with, Joe, as well.
So it's a bit early on a Monday morning for that, isn't it?
I know. I'll have to get that little sort of like website that you go to find big words on a Monday morning.
Okay. Okay, so elsewhere what we see some data out of China. The unemployment rate rises to 5.5% from 5.2%, so that's not particularly great. Or was that in the yeah, it was China. US 10-year yields are starting to ease back this morning after an impressive push higher on Friday, and the Nasdaq outlook is being dictated by yields going forward. So continue to see a link there between rising yields and performance on the Nasdaq. So Steve, I'm going to throw it over to you, and you can talk us through some charts. What are you seeing today?
Yeah, all I'll do really is I'll run through the weekly charts in the indices that we cover and the commodities, just to sort of like give a bigger picture view on a Monday. It's always good to sort of like see where we ended up at the end of last week and where we're starting this week, and the real bigger levels to watch, rather than the sort of like minor intraday levels, that we do them on the intraday trade ideas we send out. So as we can see on the FTSE, we're obviously in this corrective bullish type channel higher. If we draw a line from here to here, you can almost think it's a wedge, a very, very long wedge, but I would like to call it a bullish channel instead. And it is corrective. We're sort of like trying to correct back to this 76.83 high after the sell-off we saw obviously last year when the pandemic really smashed us. And we're close to the 78.6 Fibonacci retracement, which is considered a normal retracement in normal markets. So we've seen this A, B, C, D correction, and we're getting back towards this year's high. Comes in at 69.60. So we're only 165 points away from that this morning. So potential for a move higher, because we formed a bullish engulfing the previous week. Last week was a hanging man, so I have to be a bit wary about that. But as long as we stay clear of the last week's low, which comes in at around 6,600, then I think we've got potential to kick on. But this is obviously a congested area from previous week, 18th of Jan week and the 15th of Feb week. This was around the top, around 6,800. So let's break above 6,800 to see what's up there, and if we've got opportunity to continue. The DAX, a little bit of a more rosy story, really. The bullish engulfing followed by a very strong bullish candle, almost like a Marabuzo type candle, in this expanding wedge formation. So still potential for the upside. The upward trending resistance line doesn't come in till 15,000. That's 450 points higher. So we've still got decent potential on here. We are seeing a little bit of bearish divergence, but plenty of room to continue higher before we see the correction. So positive on the DAX. The CAC on the weekly, again, really, really positive, really pushing hard towards these all-time highs, coming in around 61.23. We're 60.77, so only 50 points away. That's within spitting distance, and the momentum is building quite nicely here. So that out of the three that we just covered looks pretty positive. Excuse me. Yeah, that phone. Dow Jones all-time highs, 32,888 as we speak. So no holding that bad boy back. That's shrugging off everything else and continuing higher. Then $1,400 aren't lasting long in the pocket. They're going straight into the broker's pocket. On the Nasdaq, it's a different story. As we've seen over the last few weeks, we've seen this corrective sequence, bearish outside candle followed by two decent sell-offs. We had tried to get a recovery a couple of weeks ago, didn't we? Failed last week though, as formed almost a bullish engulfing type candle around the body of the previous week. So a little bit of potential respite for the tech stocks, which have taken a little bit of a battering. We see this bullish channel, but there's another upward trending resistance comes in at 11,700. Yeah, I'd be a little bit wary of the tech stocks and settle more maybe for the standard industrial and S&P stocks. We're approaching again the 4,000 level in the S&P. We've the all-time high, we've got 3963.64, and we fell short of it last week by 4 points, and this week we're very, very close. We're only sort of 12 points away from it. So I think a break there around about the US Open time, and we could get a little bit of a squeeze higher towards that 4,000 level and maybe get a reaction from there. Again, we're seeing this bearish divergence where momentum is negative, which you wouldn't think after posting this almost like a morning star reversal formation, but it's a continuation formation rather than a bottom. But you can see where the momentum is dying off, but the prices are still going higher. So something isn't right there. Expanding wedge on the Aussie 200, that's about mid-range, so really wouldn't sort of like to make a call there, but everything seems to be pushing higher with the indices, so you know, looking to sell rallies of anything. And in the Nikkei, we're seeing the momentum stalling as we've got this corrective sideways sequence. Indecisive a couple of weeks ago, followed by like a bullish hammer type, but it's in the mid-range. So, but it's just the price action has been a little bit more positive for Nikkei after a couple of weeks before. China doesn't look very good. Almost looks a little bit like the Nasdaq, having a bit of a pullback after its extreme bubble was burst. The evening star doji formation has formed a top, and we're seeing continuation in the selling on the China 50. Hang Seng under a little bit of pressure along with the China 50. So last week was a bearish engulfing candle and made a new low. The real level in the sand or line to look at, support line, is around about 28,000. So again, a little bit on the back foot. We can see momentum stalling quite aggressively there. Moving over to the commodities, gold. I love gold. It's feeling nice and shiny. And last week was a more positive week. Although we had a little dip down, got to a low of 1677. Didn't really quite test the 1660 level that I sort of would like to see tested, but it was close enough. And then we had a nice reaction higher and have started on a positive footing this week. Late Friday, we rallied up to 1720. Well, it says 1740. Oh, that was on the week. No, so I think Friday's price action was, yeah, got up to 1729. So didn't really want to dive down into the daily chart, but looks positive to start the week. But really need to see either a break of the 1740 level to see us then retest the 1760 resistance, or if we don't manage to break that 1740 level or just fail above it, then you know it opens up and maybe a potential retest of the 1760 again. So although it was a good week last week, not completely convinced yet. So really looking at the dollar really for clues on that. Won't really run through the 10-year, the treasuries, probably not enough time this morning, but we'll pick them up during the week. Again, oil has punched higher and really sort of testing these previous swing highs from April 2019 and Jan 2020. The Jan high has been taken out. We're sitting nicely above it. We got the 70. I was going to say 78.6. We've got 76.80 as the really next big target. That will be the resistance or the high from 1st of October 2018. But it could take a few months till we get there. So we'll be pushing towards a 3-year high if we manage to get to them levels in the future. Still looking positive on the oil. It's susceptible to sort of pullbacks on, you know, the sort of like the lockdown continuing in certain areas. I saw Italy going for its third lockdown and other places. So not again, it's pushing higher, feels a little bit forced, but it's very difficult to argue against it. I suppose that's about it really for the sort of like the longer term outlook.
Thank you, Steve.
Yeah, and then we could sort of slide into the indices, and really for me that just the Dow, we've had this little bit of a the DAX, the dollar index had this like nice little squeeze higher, but seems to have failed last week. So I think that will be what we're going to do.
Yeah, well, I'll come on to my take on that. I mean, it's just really a continuation of what I was speaking about last week anyway. But first up, just look at sort of where we're at on the whole on the currency front. So this is obviously the baskets that we look at, and it really is all about the dollar at the moment. Every time that you see the dollar move up, you're getting everything else move down, and vice versa. So continue to see Swiss franc and Japanese yen really looking very weak. Euro sort of somewhere in the middle. And then we've got all these riskier currencies like British pound, which is considered one at the moment, and New Zealand dollar and Aussie dollar as well. But the dollar index seems to be perking up a little bit. And, as Steve mentioned, we've seen that little bit of a bounce off of the lows. If we take a look at the daily chart on dollar index, this is my setup for that at the moment. And we saw a decent breakout of this wedge around here, and then a push above this resistance level at 91.60, which I think was quite key, maybe forming some sort of bottom pattern here in the very short term. So we saw a push above, topped out around about 92.50, and then we've seen a pullback down to this 91.60-ish level, which seems to be holding for now. We're above it at the moment. Maybe some sort of short-term flag forming on that. I don't know if that's, maybe that could be the case, and if that does, then take the bottom of the flagpole and break up, and we're sort of targeting a move up to this 38.2% level, which comes in at 94.48. So I'm still of the opinion that we may see a correction higher in the dollar index, and that's where I'll be targeting, somewhere around here between sort of 94 to 94.50 really. So keeping an eye on that one for now. Elsewhere, and on the flip side, obviously euro dollar often looks the inverse of the dollar index, and arguably we're forming a bit of a top here, broken out of this channel to the downside, broken below this support at 19.48, and seeing a retest of that over the last couple of days. In terms of downside targets on that, I'm looking for a move down here somewhere, quite a fairly big range really to be targeting at 114.92 to 116.95, so kind of 200 tick range really. But I think down here I'd be maybe more interested in looking at it from a speculative long side, but then maybe my concerns would be that we're actually forming a larger top pattern here, with this maybe forming some sort of left shoulder, this the head, and then maybe some sort of right shoulder here before a deeper move to the downside. All very speculative at this stage, and obviously has to do a hell of a lot more before we can start making those assumptions. But I'm thinking bearishness on the on euro dollar for the short term. Over to cable. This still looks quite decent. We've got a nice little bullish trend here on the daily chart. We saw a breakout of this wedge. We're above that still, although that engulfing candle on Friday doesn't look overly healthy. But if any pullbacks are contained to sort of 138.50-ish, then we may see a continuation higher in the short term. Looking at some of the other dollar currencies, so dollar CAD broke down to new lows, which obviously isn't particularly great, but shows that CAD is a stronger currency at the moment than dollar. If we look at dollar Swiss, that's potentially forming a bit of a flag, a bit of a breakout there for maybe a continuation higher versus the Swiss franc, as we've seen the Swiss franc continues to underperform alongside the Japanese yen. And this is the sort of the most interesting chart for me today. This is the daily chart. Let's just scroll this all the way back. We've got a pretty big old trend line here that comes that started back in 2015. So we've seen one attempt, we've seen one hit there, another one there, another one here in February last year, and now we're into that level again. And it also coincides in the shorter term with an 88.6% fib level from this high here on the 9th of June down to these lows here on the 6th of January. And look at that candle that we're posting today. We've had a little bit of a poke above the high that we posted last week on the 10th, forming early stages of a shooting star, and we failed again, bang on that trend line. So I'm thinking maybe there is maybe some money going to go back into the Japanese yen. I mean, it kind of goes against what I'm saying with the dollar index, because I think that could be going higher. There's no reason why dollar and Japanese yen can't go higher at the same time, but I just think maybe because Japanese yen has been so weak, that maybe you will see a little bit of outperformance from that, maybe. And going by that chart, that's why I'm making that call. So that kind of rounds it up for what I wanted to talk about the FX. Unless there's anything that you've seen on the FX front, Steve, that I've missed.
No, I'm sort of longer term a bit more negative dollar, but apart from that, it's all good.
Okay, so let's have a look at the gun to the head trades from last week. Not much positive to share with you all on that, unfortunately. We had a short DAX trade, which was 65 ticks down at the close, or 0.65 R, and Steve, you had a gold short, which was stopped out for a 10 tick loss. Overall, it's pretty much flatlining, as we have been for the last couple of months, really. It's been a struggle to get any kind of follow through in many of these technical patterns, but hopefully that will change this week. Steve, have you got anything that you like?
Not really. I haven't got anything that I like.
Let me go then, and you can take some more time to make your mind up.
It's so obvious. Yeah. I should have actually just called it then, shouldn't I? Yeah, I really like this selling dollar yen.
Right. Well, I'm going to
let you high and dry.
Zoom it into the intraday charts, because we've seen this failure here above this level, fairly swift reversal. So it's currently trading at 109.06. I'm going to place a stop loss above the highs that we saw today, and I'm going to target a move down to these swing lows here. So really sort of a zoomed in version, if you like, of what I like on the bigger charts there, on the daily charts. Nice bit of bearish divergence here as well. So the RSI making new highs, but lower highs, but the price making higher highs, as you can see there, which gives us an indication of divergence. Targeting 108.35 on the downside, just looking for 2.25 R on that today. That give you enough time, Steve?
Yeah.
Go on in.
Yeah. Don't really like doing this now. I'm sort of like pretty looking around everything. I think everything just feels a little bit out of sync. Looking at the Bitcoin, I think there's some decent sort of supportive areas around here. I would have thought breaking through here or selling the Bitcoin would be an idea, but I've got a feeling that we're going to see some support coming in on that. Yeah, I mean, I'm sort of struggling a little bit, really. Gold looks potential to sort of retest this 1740 level. I'm going with that. Let me just 1729.50. I'm going to buy gold at 1729.50. I'm going to have quite a tight stop. Really sort of like looking for a break of that. 1720.50 stop. And
you done ticks there.
Going to go for a 2-to-1 risk reward. Is that right? 1747.50. It'll mean if we take this 1740 level out. So 1729.50. I'm buying gold. Stop at 1720.50, and the target is 1747.50. Not really sort of confidence isn't great in that. I'd rather be buying it down at this 1720 level where my stop is, but just gun to head, risk reward, blah blah blah. That's about where I am.
Good. Okay. Well, we'll see. In terms of what's going to move that today, there's not a hell of a lot happening with regards to economic data. We do have US Empire Manufacturing Index at 12:30. So daylight saving hours, is that what it's called? I know it's called, I don't know what it's, is that right?
Anyway,
the clocks have changed. Nice. The clocks have changed in the US, so the US markets will be opening
daylight saving time, DST, is it?
An hour early or 2 hours early? Hour early. It's saying 12:30. Oh, so data's normally at 1:30, isn't it? So yeah, everything will be an hour early. US markets will be opening at 1:30 today as opposed to 2:30. So don't get caught out on that.
It reminds
Our
me, I've got the
clocks change at
dentist.
the end of the month.
Yeah, I've got the dentist this afternoon at 2:30.
Again?
Yeah,
Seriously?
no, 2:30. Dentist. It's a Chinese dentist.
Wicked.
Are we allowed to say that?
I don't think so. Not anymore.
It wasn't
Okay.
a joke. Anyway, that's what time my appointment was. 2:30.
Okay. Anything else, Steve? Think we can wrap it up there. If not,
Yeah.
lovely. All right. Well, have a good day, everybody, and we'll be back tomorrow morning.
All right. Cheers.
Cheers, then. Bye bye.